The Greater Toronto home sales increased strongly on a year-over-year basis in November of 2024, and prices remained steady. And we are all hearing economists saying that it looks like we are bottoming out on price, but what does that mean and where are prices heading in 2025? Hi everyone and welcome to my channel. I'm Allia Akkad. I'm an active, aggressive Toronto real estate agent servicing Toronto West all the way to Hamilton, Burlington. And if you're interested in the most up-to-date and accurate real estate market reports, not just fluff on the news to scare you, then you reach the right place. So don't forget to like and subscribe and never miss another video. Now, back to the GTA's real estate market. So sales did increase because buyers are benefiting from more affordable market conditions brought to you by lower borrowing costs. New listings were also up compared to November 2023, but as much lesser annual rate. This meant that market conditions tightened, resulting in overall average price growth compared to last year. As all of you should know by now from following me, that supply of the market does affect price too, not just low interest rates. So if there is less listings coming to market, expect some prices to go up as well. And as we approach the end of 2024, I'm pleased to report an improvement in housing market conditions. Many home buyers patiently waiting on the sidelines for reduced inflation and lower borrowing costs kept more inventory on the market, which was stabilizing the prices. And with selling prices remaining well off their historic peak and monthly mortgage payments trending lower, the stage is now set for an accelerated market recovery in 2025. GTA Realtors reported 5,875 home sales throughout TREB's MLS system in November 2024. That is up by 40.1% compared to 4,194 sales reported last year in November 2023. New listings entered the MLS system amounted to 11,592, and that's up by 6.6% year over year. On a seasonally adjusted basis, November sales were up month over month compared to October, and the MLS Home Price Index Composite benchmark was down by 1.2% year over year in November 2024, a much lesser annual rate of decline compared to the previous months. And on average, the average selling price was up by 2.6% compared to November 2023, which gets us to $1,106,050. Year over year average price growth was greater than that of the HPI composite benchmark because of the greater weight people are putting on detached homes compared to last year. On a seasonally adjusted basis, the average selling price edged slightly lower compared to October, where market conditions tightened particularly on single-family homes, and the detached market segment experienced average annual price growth above the rate of inflation, particularly in the city of Toronto and other strong markets like parts of Mississauga in the Peel region and Oakville, the Halton region. But in contrast, the condominium apartment segment continued to experience lower than average selling prices compared to a year ago. Condo buyers are benefiting from a lot of choice and therefore a lot of negotiating power. This will affect renters into home ownership and borrowing costs as the borrowing cost trends lower in the months ahead. So first-time home buyers, this is your time. While the rental market will remain relatively well supplied as more renters transition into home ownership, expect rental demand to pick up as population growth remains high. The rental market could strengthen for both tenants and landlords by reducing the backlog of cases the landlord and tenant board has. So that's for Toronto. Now what's happening to the west end of the GTA, this wonderful place called Hamilton, Burlington, where there was reported declines in November sales, making it one of the weakest Novembers since 2010. Raising sales for apartment style and semi-detached homes were insufficient to offset the pullback in detached and row home sales. Year to date, sales are down by 11% year over year and are 30% below long-term trends. New listings trended down over the last month. However, this is typical for this time of the year. There were 1,384 new listings with elevated supply levels higher than traditionally reported in November. So despite this inventory trend down over the last month, but with 2,728 units available, supply levels are 23% higher than last year and 32% above long-term November trends. So persistently high lending rates are not only impacting demand, but also supported gains in new listings over the second half of the year, bringing the supply levels up. And buyers are generally seeking out homes in the lower price ranges. However, much of the recent growth in new listings have been driven by higher priced homes, creating buyer market conditions in the upper end of the market. Region-wide, months of supply has hovered above the 4 months for the third consecutive month. So 4 months of supply for 3 months in a row now. And home prices above $800,000 make up the majority of months supply. Conditions are more balanced for lower priced properties as well. And this additional supply has weighed on homes prices, which have eased compared to levels reported earlier this year. As of November, the unadjusted benchmark price for Hamilton was $805,700, nearly 3% lower than last month's and last year's levels. And for Burlington, the benchmark price has fallen below the $1 million mark as of November of 2024. So now it looks like we're on a downward trajectory in Hamilton, Burlington, and because of the supply, it's uncertain if there's going to be an uptick in this region in prices this spring. The good news about this report is that the market is normal for this time of year anyway. The bad news, how long will this balanced market keep up? That depends. Some markets in the GTA are going to be in a seller's market this spring, provided that inventory levels don't go over 4 months supply and that home prices are priced right. So in summary, prices have gone down and we're seeing sales up, specifically in the GTA, and we haven't seen percentages like this since April of 2022, where there was the peak of the market in all of history. That was right before interest rates started to climb. Now we're here in December of 2024, where not only prices are down, interest rates are down too, and RE/MAX is forecasting, much like other economists, that this spring 2025 will have accelerated price increase. There is also a forecast that prices will go up by 5% this spring, and if you're thinking of selling this spring, start preparing for it now. We're in December, you're thinking of selling this spring, start preparing for it now so you can actually gain from this market recovery. But, and this is a big but, as an active, aggressive realtor who speaks to hundreds of buyers and sellers every single day, most homeowners are doing the exact same thing. They're waiting for this spring to list their home for sale, which is only going to keep inventories levels up and balancing the market at the same time. Buyers are actually starting their home search now in December in anticipation to buy before these prices actually increase. So everyone's anticipating this hot spring market in 2025, but will it be as hot? We can only guess, but for sure, I will keep you 100% posted with these videos. So don't forget to like and subscribe, and you'll get these videos in real time. So if you are actually a seller or homeowner thinking about selling and looking for some direction on when and how to list your home for sale in 2025, I invite you to call me, email me directly, and I'll be more than happy to guide you on the sale of your home and how to sell it for the highest price possible that this market will give us. Reach out anytime. My contact information is below. And if you found this video helpful, again, please give it a thumbs up, and we'll catch you in the next market update video. Thanks for watching.